Hey guys, thanks for joining the Stock Option Market Weekly Update for the week of October 2nd, 2023. We're going to touch on some of the economic numbers, where we are year to date. We're going to go through the trades that we've got on the tastytrade option trading platform as well. I think it's super important that we understand the ways that the rich are getting richer and how they're using options to increase profits in their portfolios. And we're going to talk about how we can do the same. All right, please go ahead and hit that like and subscribe button down below. It really helps out the channel, so thank you very much. Also, please download the free options workshop in the link below. If you haven't, it talks about the benefits of trading options over just buying stocks outright. Disclaimer, I'm not a financial planner. Please do your research if you're new to trading options and start small. All right, guys, let's just jump into it without further ado. All right, guys, let's take a look at where we are started the week. So this is the 5-day chart on Yahoo Finance, and we started the week on the SPX. This is the total market index at 4320, and we ended up. So we're at 4320, and we ended up at 4288 is where we ended the week at. If we look at year to date, we are still up 11%. We started the year at 38.24 over there, and we are at 42.88. PEs are still at 17.9, so pretty fairly a little bit higher than where I like them to really get long, but IVRs have jumped up, so that's nice. That's helped us out with our option trading and being able to put on more trades and collect more option premium. Let's move on to the economic calendar for last week. There wasn't too much news. Consumer confidence came out and it was a little lower than expected at 103 versus 108 expected. PCE came out near the end of the week. Core PCE and PCE index was a little higher than the 0.2. It was 0.4. But the core PCE index was 0.1 versus 0.2, and year over year 3.5 versus 3.3. So not too much in the economic news there. As far as interest rates, Powell and the Fed is still not expected to cut interest rates until looks like July of next year, according to this FedWatch tool, which I really like. He has been talking that, hey, if he needs to raise them, he's going to raise them, or they're going to stay higher for longer. So no budging there from the Fed. Let's jump into the FactSet earnings insight report. If we look at the first page, we can see the Q3 estimated earnings growth rate of minus 0.1, and again the 12-month PE is at 17.9, so no big change there. Let's move on to page 13, looking at the numbers going forward. For Q4, analysts are looking at 8.3% earnings growth and revenue growth of 3.9. So they're really expecting a nice Q4, and that should help stocks move up a little bit. We got through September now, and things were not real good and kind of flat, down a little, and that seemed to be what the market was expecting. But now the market's expecting a jump, so we'll see if that happens. And then going into calendar year 2024, earnings growth of 12% and 5.6%. So things are looking good moving forward. And then if we move on to page 30, I think it is, of this report, yep, we can look at the 12-month forward PEs. I still like energy at 12 PE versus 15, and with oil prices up at $90 a barrel, and OPEC isn't helping us out, and our energy independence policy is not changing anytime soon. Oil companies should continue to print money and do well going forward. You'll see I got to have a trade on Chevron that's doing well, and I think will continue to do well. Utilities still a little undervalued, and so energy, utilities, and real estate as well. A little undervalued at 15 PE versus historical 19. Um, Again, with interest rates high, people are not moving. There's a shortage of homes, so those we've got a couple home builder trades on as well. Moving on to the sector spiders, we can look at the 5-day. Everything was down since we were down slightly for the week. Um, and then if we look at year to date, we've still got communication services up and technology. Consumer discretionary was up at 30, and that I actually put on some negative trades, and we made some money on that. It dropped down to 25, so it did come down a little bit. So, with that, let's jump right into the trades that we've got on the Tasty Trade platform. So 6J is the Japanese yen. This is off because on weekends when I'm making this video, the volume in 6J in some of the futures options and Japanese yen, it's only 197,000, and over the weekend the pricing is not correct. So we have to look at this during the week. But actually, it's not 175 that I made right off the bat. But it is a call or a put credit spread that I put on. If you look at where the Japanese yen is down, so I just did a contrarian play, looking at that it should move up over time. So we just put on a $5 wide put credit spread. So we'll see how that does. But I'm not I'm not too concerned that it's going to continue to move lower. Oil, I think that oil is not going to come down for a while until the election. If even after that, we'll see, depending on what party is elected. But if we look at the chart in oil, it had a big jump up. On one of these days that was up, that's when I threw on my call credit spread, and it was a $5 wide. We're already up a little. You can look at the, we're profitable. We're over here. Here's where we're at 90 right now, so we're profitable anywhere below, the 94 price in oil. If it moved down, significantly, then I would throw on the put credit spread as well. Corn, same thing. I'm trading directionally. I've got a put credit spread, profitable as it moves up, and you can see it's at all-time low or annual lows. Wow, it really jumped up here in June of 2022, but it's at low, so I'm just playing corn long. They're not giving corn away for free, I don't think. Advanced auto parts, long. We talked about this one last week. Good financials, but the stock's just been beaten down. I think people are going to continue to keep their cars, and I think advanced auto parts should do well. They're also a target for a buy with good financials and the stock being way down. But if we look at the the chain, the 60-day, we made $80 over the last couple of months, but we've got $188 here in extrinsic that is left to come in as long as we stay above that 55, and we're at 55.94. So we're in good shape. We're going to hang on. We're in November. I actually rolled that out. You can see we were in August, made $144 on this trade in August last month, and now we're in this trade. We're down $62, but I'm confident that advanced auto parts is going to do okay. We'll make money on that. If not, we'll just roll out to the following month. Adobe, we are if we look at the 30-day chain, we've got some iron condors on. Yeah, we're down $138. So this was we did a video on Adobe and the earnings trade. Now I've got iron condors on the 500, 535, $10 wide iron condor. So we're within that range in October. And then I put a new one on in November as well. Actually rolled one out. But we are in good shape. We're still in between. We're in the profit zone where we stand now at 509, and we would make a profit on all of these trades should it finish right where it's at. But I'm confident that it's going to move up. It had a drop down The red line here, I've been putting this on the Tastytrade platform, the 200-day moving average and the 50-day moving average. So that's normally a strong support line. But, we had a move up and then a drop down. We're kind of in a range on Adobe. I like Adobe long term. So we're going to wait for that premium to come in. And you can see we've got $858 in premium that can come in. So we can do really well in there moving forward. Okay, AMD, we've got a $5 wide iron condor, actually pretty tight, and we are at 102.82, so we are actually right in the middle between our short strikes, and we've got almost $400 in premium that can come in, so that's pretty good. And in AMD, we've done okay. We haven't killed it, but $267 in 30 days. 385 in 60 days. So, we're doing okay. It's profitable and we're in the middle of our range. I like AMD. Amazon, I'm long. They're a behemoth and they're going to continue to do well. I think they're going to 200. It's just a matter of time. They're down at their 200-day support level. So good time to get long, I believe. And if we look at the curve mode, I need a slight move up to 132 in order to be profitable moving forward. And that is Amazon. Bank of America, the banks haven't kicked in yet. I think they will early next year. We've got some leaps on there, so I'm not going to touch too much on those. Costco, we did an earnings trade last week. And if we look at the 30 days, we made 155 bucks. I've got right now 2 sets, so I put on another set, and we're still, excuse me, right in the middle of that range, 540 to 580, and we're at 564. So you can see the profit range right there in the middle, and we've got a 22 IV rank, so still pretty good. So we'll just wait for the premium to come in. We've got $679 that we can make just in the next 20 days. We're still in the current option cycle. So I like this Costco trade right now. If we look at the chart, we've got, it moved up, good earnings that came out. So I don't think it's going to move up too much more. Earnings are already out. I don't think it's going to drop too much. So we should be in good shape moving forward. Chevron, the oil stocks, I think as long as oil is above $90 a barrel where it's at, we will continue to do well. We've got two $5 wide, or we've got a $5 and a $10 wide in November put spread on. So we want the stock to move up above 162. We're profitable, and we've got it's currently trading at 168 with an 18 IVR. And unlike Exxon, which is at its 12-month highs, Chevron still same great financials, will print money with oil this high, but still room to move up, to reach its highs over the last year. So I do like Chevron moving forward. And if we look at the 30-day chart, yeah, we're pretty flat, only up 25 bucks. But that should do well moving forward. And if we look at the curve, you can see there. Now, DraftKings, we've got 2 poor man covered calls on in DraftKings. It's done really well for us. If you look at over the last year, we've made over $1,000 in DraftKings just doing the poor man covered call. So we've got 2 leaps on, and then a 30.5 call against it. And I like collecting that because we are kind of, we've had a move up, even though I think DraftKings can go much higher. We are up at that, you see the 50-day moving above the 200-day. So that means it's trending up. But I like having on the leaps with the 2 calls against that and the poor man's covered call. And you can see we've done well in DraftKings. We're going to stay along. Enphase, taking advantage of the inverters and solar market, 120 to 130. We've been kind of stuck in that 120 range. We are in the profit range, and it's way down. So I do like Enphase going forward. again, it's trading at 120 right now, but high IV rank at 53. So we'll wait for that. We've got $400 in premium that can come in over the next 40 days as long as we stay in this green profit range where we are today. And I think there's a good chance we will. Gold stock, I'm not going to touch on that. Small stock. Lennar, the home builder, 110 to 120. We put that on with an earnings trade, and I think home builders, because of the short supply, will continue to trade within a range. With interest rates so high, it's tough for people to get into homes, but there is a housing shortage. So people not selling their homes, the home builders should do okay. We'll just wait for that $184 to come in, trading between 110 and 120 over the next 20 days. We're still in that range. And, if we look at the 30-day, we've only made $61, but we'll wait for that other, 180 to come to come in. Lululemon, a new trade I put on. Lulu came out with earnings and did real well, I think, and they jumped up, but now they've come back down to that 50-day moving average. I think they'll trade within a range. We've got a huge profit range from 350 to 420, and that's why I look to put this trade on. So if you look at 350, we're down here, so below the 200-day moving average. So there's strong support down here at 350, and then all the way up to 420. It's never been that high. So we've got a huge range that it's been trading in, that as long as we stay within that big range, then we will make $300. So this is kind of a no-brainer trade. I like Lulu right now with an iron condor, $10 wide. Meta, I love betting against Zuckerberg. It's at 340. I've got a 340, 350 call spread. So we've got to have on some negative trades so that delta negative, so that when the market comes down, we make money as well. So you want to pick stocks that are at highs, and Meta's at highs. As long as it stays below 340, which is way up there, it would have to move up to here in order for us not to be profitable. So we've got that call credit spread on $177 on a $10 wide left to make in Meta. MPW, not an option trading stock. It's a down medical properties. It's a healthcare REIT and huge dividend. So I'm just long term in that. Micron, we did an earnings trade last week. I did not do a video on this one, but Micron and data should do well. With memory and storage, SSDs and memory is definitely needed for AI and the movement in technology going forward. Data is huge, and there's going to continue to be massive needs for, and Micron will do well. But you can see it's been choppy, but trading within a range. We're up $31 on that earnings trade that we put on 58, or the 63.58. Actually, I did an iron condor, and then I closed out the call side because, yeah, $1.50. Then I closed out the call side because it moved down, and I left on the put side. And you can see that it did move down after the earnings, way down here. I left the put side on, and it's already come back. So now we're going to make money on the put side going forward. We're well within the profit zone there. So we already closed out the call side and made $96 so far. So we've made 96. We've got another 40. So we're going to make 130 bucks on this trade. Nike, I put this on after earnings. I didn't play earnings, but Nike had a drop, was way down, but then following earnings, it moved quite a ways up. So went ahead and put on an iron condor after earnings, and we're looking to make a couple $100 on Nike going forward. Oracle, we need it to be around 110. We've got iron condors on. You can see we're trading here at 105. We just needed to move up into this, above 107 to 115. and will be profitable in the next 20 days. And I'm confident Oracle will. Great stock, and it's been down. It's right at that 200-day moving average, so we've got support there. So I'm confident that it will hopefully not break that 200-day moving average line. I don't see why it would. They're doing great. Software CRMs are supposed to do great going forward, and especially as the economy continues to improve. Palantir, we've got poor man's covered call, so we wrote that 18 call against it. I like doing that. Collect another $90 by and fund the cost of that leaps option on Palantir, and it's been trading within a range. I like Palantir from that 15 range, 14, 15, all the way up to 20, and I think Palantir is going to trade within that range going forward, over the next year. So I'll keep trading it. SoFi, FinTech. I'm long. I've got 300 shares and then 8 leaps options. Haven't done well so far. It's been down. Everyone knows, it's down at $8, but I don't think it's going to go much lower. They're going to be huge going forward. It's just a matter of time. So we'll continue to hold SoFi. Semiconductor, SOXL stock, I've got an 18 put. We're at 18.88. So as long as we stay above that, we're in the profit zone now. We'll continue to collect premium going forward. SPX, this is a whole, over the last 30 days, we've made $1,795 in SPX, and we're just trading call credit spreads against it, and we're at 42.88 right now. So last week, I think we only made $120. The week before, $765. So I'm refining my strategy. I'm not going to concentrate too much on this, but you can see right now on the 0 day, my whole strategy is I put on the 0 DTE $5 wide. If at the end of the day, if it's not profitable, then I'll roll up and go $10 wide. So my max loss will be 1,000, and I'll collect more premium. And hopefully we'll have a turn the next day, and then be profitable and be able to get out and then rinse and repeat and do it again. However, because a lot of my positions are long, I use this as a hedge against my long positions, and I'm not going to continue to double. So once I get to $1,000, a $10 wide, then I'll roll out 30 days, 45 days, whatever I need to do, and in order to collect more premium. I may go $15 wide at that point, worst case, if I think the market is still going to come down. But we'll see going forward. I'll continue to, I'll put a new video out, and I've got to do that on the 0 DTE SPX and how I do it. Still refining my strategy, but it's working so far, and there'll be a video coming out. So keep your eye out for that. SPY, can't go wrong doing an iron condor in SPY. $5 wide, pretty safe play. 410, 446. We're right in the middle there with SPY. IVR was pretty good, so I just threw one on. Needed something to do. TDOC, TDOC, they're going to do good long term. Hasn't done well so far, so I may pick up more shares. I've got a couple of leaps options. Any big up move, I'll throw on a call to turn it into a poor man's covered call. Told, just like a Lennar, right in the middle. Home builder. We've got 135 left to collect in premium. So that we'll just wait for that to come in. You can see 30 days, we're actually down until over 30 days. So we've got some making up to do, but we're right in the middle of that range, and that will come in, and we'll be profitable until Visa, new trade that I put on this week. You talk about the fintech stocks, and Visa and MasterCard are the two biggest, fintech, and going to continue to do well. Super solid financials. I've got the $5 wide 230 put spread on. Visa's still got room to move it. It's down at that 200-day moving average, so there is support. I compared that against MasterCard MA, and MasterCard was up a little bit more with similar financials, so I thought Visa was a better buy. This is one where you could do a pairs trade. You could go, put on a call spread on Mastercard and put spread on Visa, and look for them to both be profitable and not lose on. If you're losing on one, you're most likely making money on the other. Hopefully, you make money on both. Verizon, this is a dividend stock. I'm not trading options, so I collect the dividend, and I'm just going to accumulate more. It's at lows. Verizon's going to continue to do well going forward. I need to pick up some more of that. Wells Fargo Bank, we've got a call against our leaps. It's going to, I think, continue to benefit and do well going forward. And then XLY is the last one. This is the consumer discretionary. We've got a call, excuse me, call credit spread that we put on, and there was a drop. So we made money on this trade. Yeah, just in the last 30 days, $123. And we've got now another 171 to collect in premium as long as we stay below that 164 strike price. And we're below that now. I'm confident with XLY being so far up that it's come down. I think the consumer discretionary, I did a video on this one, so check that out. I'll put a link down below. But I think people are going to get more cautious about spending with inflation so high, and the paychecks from employers aren't just keeping up with the inflation. So I think people are going to stop spending money on the items that they don't necessarily need. All right, guys, we don't have too much in earnings coming out next week. We do have Constellation Brands, I think, is a great earnings play. I'm going to do a video on that, so keep your eye out for that video. And thank you for watching. I appreciate you taking the time to look at the trades. Please let me know any comments or questions down below in the comments section. I will always answer and reply to every single comment. So look forward to that. Remember to hit like and subscribe. Help get the video out to as many people as possible. I really appreciate it. Thank you very much. Also, download the free options workshop in the link below. It talks about the benefits of trading options over stocks. And see you in the next video.